Law firms manage client funds through IALTA accounts. IALTA is an acronym for Interest on Lawyers' Trust Accounts, special bank accounts used to hold client retainers and settlement funds separately from firm cash. Managing these accounts manually requires perfect data entry across spreadsheets and banking records. If you misalign a single deposit or transfer, the entire compliance structure fails, exposing the firm to ethics violations. The standard manual process takes about 14 hours every month. You must export bank statements, manually match every trust to operating transfer, and calculate individual client balances in complex spreadsheets to ensure your records match the bank. Methodically, we are going to replace that manual workflow. By the end of this module, you will build a system that condenses a 14-hour manual reconciliation into a 30-second automated process. To build this system, we will use a specific tech stack. First, QuickBooks Online holds your raw accounting data. Second, a Python script will query the API to sort that data. Finally, the Anthropic API connects us to Claude, which acts as our compliance auditor. Moving your trust accounting out of spreadsheets gives you real-time visibility into your client obligations. You go from a state of reactive compliance anxiety to being permanently ready for a state bar audit on demand. The most severe ethics violation in legal accounting is commingling. This is the act of mixing client trust funds with your own firm's operational cash. This often happens through a simple data entry error. For example, a paralegal might receive a $10,000 retainer and accidentally deposit it into the firm's main operating account instead of the IALTA trust account. Because manual firms only reconcile accounts at the end of the month, that error sits undetected for weeks. During this time, the firm is technically spending client money on firm expenses. When the monthly reconciliation finally uncovers the discrepancy, the accounting team has to halt normal work. They spend hours tracing the original deposit and executing corrective journal entries to balance the ledger. The danger is that state bar auditors can request your financial records at any time. If they audit you during that 3-week window before you find the error, the records will show a clear commingling violation. Human-driven retroactive reconciliation is unsuited for a zero-tolerance regulatory environment. You need a system that detects improper deposits the moment they hit the ledger. Step 1 is configuring the QuickBooks chart of accounts. The chart of accounts is the master list of all financial categories your firm uses to track money. You must follow a strict naming convention for your bank accounts. The Python script needs a clear target, so your trust bank account name must explicitly include the word IALTA or trust. Client funds held in trust do not belong to the firm. Until you perform the work, these funds are recorded as a firm liability, never as firm income. To execute this in QuickBooks, you create a parent liability account titled Client Trust Funds Held. This account tracks the total sum of all unearned money you owe back to your clients. Next, you create granular sub-accounts beneath that parent for every active matter. When a client pays a retainer, the deposit credits their specific folder, keeping their funds isolated from other clients. Hard-coding this specific liability structure into QuickBooks ensures your accounting remains separated. This guarantees alignment with ABA Rule 1.15 before we even write the code. Now we build the Python extraction engine. The script begins with an OAuth 2.0 authentication block. OAuth 2.0 is a security protocol that allows our script to securely access your QuickBooks data without storing your actual password. Once connected, the script's first action is to query the QuickBooks database. It searches the chart of accounts to find and store the specific account ID for your IALTA trust account. Using that ID, the script pulls every financial transaction from the last 90 days. It separates the data into 2 lists: money entering the trust as deposits and money leaving the trust as transfers to your operating account. The script then reads the descriptions attached to every transaction. It uses parsing, the process of extracting specific data from text, to identify client names and matter codes so every dollar is linked to a specific case. With the data tagged, the script compiles a running balance for each client. By dividing these balances by your firm's standard hourly rate, it calculates exactly how many billable hours are remaining before a client's retainer is depleted. Next, the script runs an automated commingling check. It scans the firm's main operating account for keywords like retainer. If it finds a client deposit in the wrong bank account, it flags the transaction as a high-severity risk. The final step is packaging these calculated balances and detected risks into a structured prompt. It sends this data to Claude AI, instructing it to act as an independent auditor. By linking these functions, the code organizes raw database entries into a structured compliance report that identifies errors automatically. When you run the script, it processes the entire 90-day accounting period instantly. Manual labor is replaced by rapid automated sorting. The terminal output provides a summary of the account health. At the top, you see the three-way reconciliation, where your bank balance, QuickBooks balance, and the sum of your client ledgers all match perfectly. Below the summary, the report lists the individual client balances. The script highlights healthy accounts in green and triggers a red alert for any client showing a negative overdraft. Next, we review the Claude AI memo. The AI provides a compliance score out of 10 and explicitly confirms if any commingling risks were detected during the scan. The AI also provides proactive intelligence. It uses the hourly projections we calculated earlier to identify clients with low retainers, automatically drafting replenishment emails that cite the specific hours of work remaining for their matter. By combining QuickBooks APIs with AI analysis, your firm eliminates the risk of undiscovered accounting errors. You now have a system that provides on-demand proof of your ethical compliance.